And we've got several questions that are coming through. The next one is actually an interesting one. Do we have Rajesh yet? Okay, we have Rajesh. Very good morning to you, Rajesh, and thanks so much for joining us this morning. We've got a viewer who says that he's a novice investor. This is Ronak Panda who's writing in, and he's looking at purchasing IDFC First at this point. Given what we've heard recently about this entire conversation about the board seat for Warburg, Pincus, everything that's happened since the fundraise, since the results, the question marks about asset quality going forward, maybe a little pressure on the MFI book, the microfinance is what I mean. Would you deploy at this juncture?
Good morning, Alex. Good morning, Vaishali. Even leaving apart all those controversies which have been there in the recent past, in the last week or so, on the valuation parameters also, I would not deploy my money in IDFC First Bank at this juncture, I would say. Because whatever improvement in results in the last 3-4 quarters which we have witnessed has already been discounted in the prices. And any meaningful upside from here would need a lot of extra workings on the numbers front, I would say. And with the kind of controversies going on, the kind of concerns on the asset quality and NIMs going forward, even the MFI book, which we have seen on other banks too going for a problem. So I would rather avoid that at this point of time. In banking space, there are better names to go ahead if somebody was looking for deploying new funds. Maybe in the private sector bank, HDFC Bank or a Kotak is a good bank, or in a public sector bank, you have likes of in the large cap SBI, of course, and mid cap Bank of Maharashtra. These are better banks than IDFC First Bank on valuation parameters, I would say.
Okay, so that's the view with regards to where IDFC First stands, and of course the banking sector and the pockets that Rajesh likes in the banking space. All right, the next question is from our first caller for the day. Dheeraj is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Dixon Technologies.
Okay.
So I'm holding 39 shares of Dixon Technologies at 16,000 at least.
Okay.
So should I continue in the same counter for good returns for another 6 months, or should I shift to some other counter like L&T or Power Finance? Is my query, ma'am.
Okay, Dheeraj, just want to clarify: is that 16,000 or 15,000?
16,000.
16, right?
Yes, I bought it yesterday. I bought 11 shares yesterday and the remaining 28 shares today, sir.
Okay, so your average holding is 16,000. Incidentally, Dheeraj, thanks so much for that question. Is this a long-term perspective that you're seeking?
For the next 6 months or 1 year, sir.
6 months to 1 year.
Depending upon the returns. Like I'm expecting a target of around 19,000.
Understood.
In the next 1 year.
In the next 1 year. Okay. Incidentally, we've got a lot of questions, understandably, on Dixon Tech because it's in focus. By the way, it's recovered from the low point of the day. But we got Srinivas from Hyderabad who's wondering whether it can be bought at this current juncture because of the downtick in the price. We've got Raja who's writing and asking whether it's the right time to enter from a perspective of 1 to 2 years. So let's get a holistic view on Dixon Tech. First, let me come to you, Vaishali, on the charts. Generally, they say not a great idea to deploy when the stock is falling as dramatically as it is, because that's the very definition of trying to catch a falling knife. Would you say that is this case, and would you wait for certain levels?
I would not say that, because if I'm looking at the long-term chart also, I think it's done with its corrective move. But, well, I would say 15,000, 14,800 acts as a very crucial support band to maintain a positive bias and to maintain that the uptrend is intact. So the view gets negated if 14,000, the stock goes below 14,500 and sustains below that. So in my opinion, well, this was the result impact, the way the meeting has taken place today, but it's bouncing back. So I would say keep a stop loss of 14,800 and wait for the stock to surge back, because above 17,000, I do agree that it can go towards 18,000, 19,000.
Okay, understood. All right, so that's a perspective on the technical charts. Let me also get the fundamental view. Rajesh, I think, and this is based on what has occurred so far in the market, the reaction to the numbers, which were fabulous. Even if you remove that exceptional item, 250 crore rupees that they've gained, the revenue increase is quite substantial in the mobile business. and 4.3% EBITDA margin in the quarter gone by. We spoke with the management earlier. I know it was a pretty short conversation, but they're saying that they are able to move levers as required to cover for even a possible eventual loss of that PLI benefit, which contributes about 0.6% to the margin. So from that perspective, based on valuations, would you say that it's still attractive, or do you think it's pricey right now and wait?
See, in fact, Alex, I was surprised by the move which the stock gave today. Because yesterday evening, when we looked at the numbers, we thought that it was fabulous numbers, no doubt on that. The numbers are pretty good when you compare quarter to quarter, even year on year. So at least I thought that in the morning it would give a move, but I was wrong. Stock went down. And now coming to valuation, the only concern about this stock is valuation, because at this point of time, it's trading at around 80, 82 times earnings, and that's a concern going forward. Otherwise, I think the company has done well. The numbers have been good, margins are improved, and going forward with a kind of movement in the EMS space as such, and the mobile business also. I think this company can do well in the future. That's somebody trying to hold for maybe 12 to 18 months would be a good thing to hold. But in the short term, I think the valuation concerns would be there. Trading at 80 to 85 times earnings, that would be a concern, because there are a lot of stocks available in the market which are at decent valuation at this point of time.
Right. I think valuations is one big concern. Plus, I think even in the con call, when I was going through the notes, I saw that there was some delay in terms of its backward integration implementation. That is probably not being taken well by the street, and probably that's one of the reasons as to why the stock is down.
They spoke about that actually to us, and they said that those efforts are ongoing. What I found interesting, Mahima, is the fact that the management thinks that there will be improvement in margins, but not on 4.3%.
Correct.
On the 3.9% that they achieved in FY25, they expect a margin improvement. So that kind of gives you an understanding that 4.3% se badne nahi wala.
Correct. Got it. All right. Let's take the next query then. The next query is from Krishna, who's writing in from Mumbai. We addressed this earlier as well. MobiKwik is the counter. Krishna has bought 150 odd shares at an average price of 517. And he wants to know as to what should be the prospects of this company going forward. He's sitting on a loss of almost 36,000 rupees right now. Rajesh, what's the view like for MobiKwik?
See, we are negative on this stock. We think even after this kind of fall, further fall cannot be rolled out. So it's better to try to exit on any upside which one gets due to market conditions. Fundamentally, whatever has been there in the fundamentals has already been discounted, and even at these levels, we are a little skeptical of the stock. So it's a sell from my side.
Okay, earnings came through, of course, and we did speak with the management. I'd invite you to have a look at the conversation that should be posted on our social media platforms not long from now. Avi is calling us from Kolkata. Very good morning, Avi. How can we help you today?
Hi, good morning to all of you.
Yes.
I'd like to look at a fundamental and technical view of Northern Arc Capital Limited. So I've got 1,000 shares bought at 173. So what could be like 6 months to 1 year target?
Okay, so it might be a little difficult for you to get you a technical view, but let me go across to Rajesh on the fundamentals. Rajesh, Northern Arc posted its numbers not too long back. If I remember correctly, there was certain pressure on asset quality. And so that had a bearing on the numbers. Would you suggest holding for the long term?
What I would suggest is to book at least half of your holdings into this and move your money to maybe a Geo Financial or Poonawalla, which are better into the NBFC space at this point of time. At least if you are having a time horizon of 2 to 3 years, you would be best buy in the entire space.
Okay, so that's the view with regards to where Northern Arc stands. The next question is on Exide Industries. Rohit from Bengaluru has around 2,000 odd shares at the levels of 534 and wants to know as to what will be the 1 year outlook for this particular counter. Vaishali, I'll come to you on this one. In terms of Exide Industries, what are the charts indicating? And for a longish term outlook, what's the kind of support and resistance that you're observing?
I would say this stock is consolidating for a very long time after a recent fall from 540 levels. So I would say, the stock can do well. 360 would be the technical support. And the first hurdle comes to 420. Since it's a longer term outlook, I would say buy with these support levels. If you have bought at higher levels, one can average out also at these levels and look for higher targets of 440 to 480 levels.
All right, so that's with regards to Excite. Our next caller, Murli, is calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
Very good morning to you and all other panelists and anchors, co-anchors. I bought Pearl Global Industries,
Okay,
500 shares at the rate of 1290.
okay,
And the results have come, it seems to be good. And compared to peer comparison, and it's the cheapest stock as well as on ROE basis also, second, very good ROE.
okay.
Can I hold it? Does Bangladesh import, they have factored Bangladesh and Countermal also, I'm told. Is Bangladesh factory, I don't know who it will affect the curbs import curbs by the Indian government.
Correct.
But generally, if you look at the garment industry is looking back, can I hold it or switch to some other industry like metal industry like Kirloskar Ferrous or Lloyd Metals,
Okay.
which also have a good future prospects considering their backward integration of mine.
Okay, got your point, Murli. You've always been, at your A-level game when it comes to research. So we really appreciate that, Murli. I'll take this up with Rajesh. Rajesh, Pearl Global is the company, and as Murli rightly pointed out, right now India has the Bangladesh +1 strategy, plus the UK FTA might also be positive in terms of Pearl Global. What's the outlook like? And if not this counter, then should he shift to something like a metal, something in the metal space? And if yes, what should be the counter?
See, there are two different sectors we are talking about. One is Pearl Global, which is into textiles and garments, I would say, and Bangladesh factor is, yes, it's playing out. FTA, UK FTA is also playing out. But as far as the Pearl Global is concerned, I think the valuations are on the higher side at 1,300 odd rupees. Much of upside is not seen fundamentally. Due to market condition or news flow, it may go up to 1,400, 1,350, 1,400, but that would be a long call to take. It's better to book out at these levels. If you want to be in textile to take benefit of, Bangladesh and UK FTA, the better names in the sector, I would say, Vardhaman Textiles being the best. So you can have a look at Arvind. These are two in the textile space. But if you talk of metals is governed more by China factor, and there are news flows coming in that China might go for a stimulus. I don't know whether that is true or not, but if that comes true, metals would be on fire for a short term. Otherwise, also metals are in good demand. Companies are doing well. Numbers have been decent, I would say, with the exception of one or two companies. And they have done capex with the kind of infrastructure focus of the government. I think metals are going to do well, out of which I would like to recommend either a Hindalco or a Jindal Steel and Power in the large cap space. In the mid cap, you can have a look at Lloyd Metal.
Okay, all right. And incidentally, that's exactly what Murli was asking about. Lloyd's Metal was one of the counters that he pointed out. Sell is the call based on the way that it's run up. Pearl Global is what I'm talking about, of course. By the way, we spoke with the management immediately after that UK FTA was signed, and they had indicated that they are moving a certain amount of production to India to benefit from the tailwinds that will come through from the UK FTA. The next question is on Orchid Pharma. And Revati from Madanapalle is asking about this. Can it be bought at the current market price? Vaishali, on the charts, what's the view?
I would say, right now there's no clarity. Only thing that I can talk about is it's taken a good fall and it's in deep oversold. So I would say if you have a fundamental backup on this, 680 acts as a support. And I think the clarity comes only about 850, 900 levels. So I would say observe a range of 650 to 900. And that's the way I would look at it. I think Rajesh would be in a better position to answer this. So I have no fundamental knowledge.
Yeah, okay. Rajesh, very quick view on Orchid Pharma. Would you suggest a buy at this price?
It's a avoid. The company went for capital reduction, hands changed. Despite that, numbers have not been improved. It will take at least 2-3 years to show some meaningful return. So it's a avoid at this point of time. Maybe a Cipla, Dr. Reddy's or a Divi's would be a better pick.
Farmer pack looking good, up about 1.7% in trade today. And by the way, we haven't addressed it, but the markets have recovered quite substantially from the low point of the day. Let's see, let's pull up the intraday chart for the Nifty 50. Okay, so it's holding on about 0.9% higher, thereabouts, and very dramatically different from the start. If yesterday the tone and tenor shifted to the downside, today the tone and tenor shifted to the upside. Let's see whether that holds true for the rest of the session as well. We've got our next caller, Nagarjuna, who's calling us from Andhra Pradesh. Very good morning to you, Nagarjuna. How can we help you today?
Sir, very good morning, sir.
Yes, good morning. Please go ahead.
I bought 1,000 shares Paradeep Phosphates at the rate 96.
Okay.
Can you please tell me the view on the stock, sir?
Okay.
Is it hold or sell?
Okay. And do you have a long-term view when you bought it, which is a very attractive level? Did you buy it from the perspective of the long-term of fundamentals?
Long-term fundamental as well as the profit booking somehow.
As well as, sir? As well as what?
Profit booking somehow.
Okay, I'm not able to hear you, unfortunately, Nagarjuna, but I'm going to get a long-term view from Rajesh on this one, Paradeep Phosphates. What is the opinion on this particular stock, Rajesh?
It's a hold from a side. The numbers have been good. The company is doing well. At least a target of 180, 190 is quite possible in the next 6 to 9 months. And by any chance it falls to 140 due to market condition, one can even add to that. At this point, one can continue to hold.
Okay, let's take the next question on Sterling and Wilson Solar. And this is a question from Sulochana, who's writing in from Hyderabad. Hi, Sulochana. The question is from a 2-year time frame, and the renewable energy play is what she's looking to address here by this acquisition. Is a stock that has been under pressure for various reasons, Rajesh. Must remember that there is a significant ownership by Reliance Industries now. Would you suggest a fresh entry at this point?
On the contrary, I will suggest an exit from this counter because despite the fact that Reliance has a ownership, company has not been doing well, and the renewable energy, as said, there are a lot of players which are doing well, and a better names will be a Tata Power. We are good bet in these levels. So why not switch from Sterling to Tata?
All right, so that's the view with regards to where Sterling and Wilson stands, and in fact, the power companies. Our next caller, Gary, is calling in from Agra. Gary, a very good morning to you. How can we help you?
Good morning to you and all the experts over there.
Go ahead with your
question. I'm
question.
position in Vodafone Idea.
Okay.
I have equity in Vodafone Idea, about 20,000 shares, bought at different levels.
Okay.
So my average is about 8 rupees. So my question is that as the government holds a large portion of that company, the government actually owns that, which is on almost about 50%. What do the experts feel about the company? Shall I hold the position or shall I just book the losses?
Okay. Just wanted to clarify, is it 30,000 shares or 20,000 shares?
20,000.
20,000 shares. Okay, got your point, Gary. I'll take this up with Rajesh. Rajesh, I hope you've heard his question. Plus, the kind of AGR overdues verdict overhang also on the counter. What's the view like? Should he continue to hold?
See, it's a very difficult thing to suggest because we all know the fundamentals are in a very bad shape. Quarter on quarter, the numbers have been pretty bad. ARPUs are much lower than the industry ARPUs. 5G, forget about 5G in various regions, 4G is also not working. Management has said they are moving into 5G and all. But the management has also categorically said that if the EGR thing is not solved, the company, they won't be able to run the company for too long a period of time. So there's a lot of negatives going on. At this point of time, I would add a little bit of technicals to this and say that you keep a stop loss of 5 rupees and continue to hold to exit at around maybe on any jumps to 8 rupees.
On any jumps. Let's talk about Ganesh Benzoplast quickly. Let's run through a couple of questions if we can. We've got Yashoda, who's writing in from Bengaluru and bought at levels of 118, wondering whether to add more of the current levels for 1 year. What's a quick view, Vaishali?
Ganesh Benzoplast, just a minute. Yeah.
In the meanwhile, we've also got RVNL, and this is a question from Guru, who's asking whether it can be bought at the current price. It's posting its numbers today. Rajesh, very quick view on RVNL?
Add.
Add. Okay. Vaishali, the view on Ganesh?
I would say keep today's low as stop loss because the stock has just fallen and it has come to its previous low. So if it breaks the 100 levels, then exit because that could trigger further sell, or else wait for it to bounce at least to 120, 120.
Okay, all right. On that note, thank you so much, Vaishali as well as Rajesh, for joining us on today's show. Pleasure having you as always. All right, that brings us to the end of this edition of Ask Profit. It's been a curtailed one, and that's understandable considering that we're in the mid of the earnings season, but we've got more